Namaste, good morning. The session where we are trying to complete the theoretical part of this chapter. We are in the schedule of expenses expressly not allowed by law. The law says these expenses you cannot claim, which we started saying TDS default, that 30% and 100% in case of non-residents. Any income tax, interest on income tax, all types of interest, advance tax, etc. Tax on perquisites. Similarly, salary paid outside India for non-residents. All these things are covered under the same TDS regulations or TDS guidance. The next arena to progress is section 40A. Whatever we study are under section 40. Now we progress to section 40A, capital A. Okay. The first section of section 40A subsection 2 is, or first section of 40A is payment to relatives. Payment to relatives. Can I pay to people who are associated with the company, or the relatives of people who are associated with the company? The answer is yes. I am not prohibiting. The law does not prohibit you from paying. The law just tells us pay in line with the fair market value. If you are paying to an external party, what would be the amount you will be ready to pay? The same can be paid here also. If you are paying to an external party, what would be the sum payable? Okay, non-relative, pay it here also. Okay, we call it as fair market value. If you are paying in excess of fair market value, okay, only the excess amount is disallowed. This provision does not tell you that the entire amount is disallowed. Where money paid is in excess of fair market value, such excess alone will be disallowed. Okay, you cannot charge it as expenditure. So that section or the provision does not prohibit you, it only restricts you. It only restricts you to the extent of fair market value. Any expenditure by way of payment to relative or a person who has substantial interest. If a person holds 20% or more voting rights, company means voting right, firm means partner, share of profit, okay, 20% or more of the voting right, that means he is a substantial interest holder. 1/5 of the company is, if he is holding, he can influence the company, substantial interest holder. We will see later, but generally as an understanding, there is only one exception to this rule. Deemed dividend alone, substantial interest means 10%, not 20%. Substantial interest which is spoken about here, clubbing provisions, okay, international taxations, okay, everywhere it is 20%. Only one place where substantial interest holder is not 20%, 10% is deemed dividend, 222E. Okay, we'll see it in IFOS. But as of now, any expenditure by way of payment to relatives or to a person having substantial which is considered in excess of fair market value will be disallowed. So, payment for goods, payment for services, okay, if it is in excess of fair market value, it will be disallowed. Relative is a normal meaning which you see, okay. Relative is a normal meaning which you will see here in the gift provision, in various other provision you will see. It is a normal meaning which is given. Please read through the section once. Okay, so excessive payment will be disallowed. Okay, right. Now coming to the 48.2 and 48.3 are almost very often questioned. Almost every question will have either one of the adjustment or both the adjustments. Payment in excess of rupees 10,000 on a single day to a particular person. If we are paying more than 10,000, pay it through approved modes. Pay it through approved modes for goods and services or any expenditure. Where it is paid through unapproved modes, where it is paid through unapproved modes, the whole of such payment will not be allowed as deduction. Okay, it is not the excess, here it is the entire expenditure will not be allowed as deduction. In the previous section 40A subsection 2, only the excess will not be allowed as deduction, whereas in this section the entire expenditure will not be allowed as deduction. The entire expenditure. Okay, am I clear to you? Right? Whole of such expenditure will not be allowed as deduction. What is unapproved modes? Cash, cross check, barrel check. Three are unapproved modes. The approved modes are lot, account payee, check, account payee, draft, ECS, bank, RTGS, NEFT, credit card, debit card, RuPay, BMAP, like that there are many. So the easiest thing to remember is the other way around. Okay, what is unapproved modes? Cash, barrel check, cross check. Okay, right. Now imagine a circumstance. So if I pay more than 10,000 on a single day to a particular person, what happens? What happens?
Entire expenditure is disallowed.
Very
if
good,
it is
Ananya. True, entire expenditure is disallowed. Suppose, Ananya, imagine a case. Expenditure is incurred in the year 1920. As on 31st March 2020, you pass, or 31st March 2021, you pass an entry, expenditure account debit to outstanding expenditure, for which the payment is made in the current year, which is in excess of 10,000, which is in violation of 48(3). Expenditure is in 2021, violation is in 21-22. In 21-22, expenditure is disallowed, we cannot say, because expenditure is not there in 21-22. In 1920, expenditure is disallowed, we cannot, 2021, we cannot say, because violation has not happened in 2020. So, how to rectify this? Or how to ensure their compliance? Law says, if you are following mercantile basis of accounting and you have booked the expenditure on the basis of accrual, at the time of payment you have violated the provision. The amount paid will be treated as income in the year of violation. So last year I allowed that expenditure, reverse that expenditure because it is not allowed. I cannot go back and revise the return. So what I do is, a reversal of expenditure is nothing but income. In case assessee follows mercantile system, any expenditure is allowed as deduction on due basis in the preceding year, for which the payment has been made by in the last year by unapproved maid, and such payment exceeds 10,000, then the amount paid shall be treated as income in the year of payment. Then the amount paid shall be treated as income in the year of payment. (48)(3) is divided into two parts. Current year expenditure, there is a violation, disallow. Preceding year expenditure, violation in the current year. Take that expenditure as income. Violation means more than 10,000 on a single day to a particular person has been paid in unapproved modes. The law gives exceptions also. The first exception is as part of law, and the next few exceptions are part of rules. In the case of resident transport operator, the limit is not 10,000, the limit is 35,000. In the case of resident transport operator, the limit has been raised to 35,000. The limit is 35,000. Okay. Since we are going to study TDS provision later at the fag end of the direct taxation arena, okay, one thing I want the class to note down somewhere in your notebook or in the material itself, whoever has the material, is about this resident transport operator. They are coming under 194C. All resident transport operators are coming under section 194C. Single payment exceeding 30,000, threshold limit. Cumulative payment exceeding 1 lakh, you need to deduct. If the operator is an individual 1%, others 2%. This is the law. But resident transport operator has an exception. In the later part of the class today, probably we will be studying a section called 44AE. They have presumptive computation of taxes. Okay. If a resident transporter, understand first, then we can take down. If a resident transporter gives two things. One, a declaration that he does not own more than 10 vehicles. If a resident transporter gives two things, one, a declaration, second, PAN, then no TDS for him. Then no TDS for him. Okay? Because in many of the questions we are going to work out, though we will be studying TDS later, there will be one. Payment of 2 lakhs made to a resident transport operator who had provided declaration and PAN. Tax has not been deducted at source. You should not disallow 30% there. That's why I am making it clear here itself. For others means we would have disallowed 30%. In the case of resident transport operator, they have a, okay, we'll study it detailed when we go to TDS provision, but now somewhere make a marking, okay, resident transport operators. Resident transport operators. 1, 40A3 limit is 35,000. 40A3 limit is 35,000. 2, where the transporter provides declaration as well as PAN. Where the transport operator provides declaration as well as PAN, then no TDS. You need not deduct TDS, and there is no disallowance also if you have not deducted. Running them on fire only. Otherwise, the exceptions are there in Rule 6DD. Payment to bank, payment to government, payment to life insurance, etc. Apart from that, payment to agriculturist, payment to fisherman, okay, are all not considered. Cottage industry are not considered. So what you have to remember is bank, life insurance, government, okay, payment for agriculture or forest product, payment to fisherman and fish related products, okay. The other questionable thing is this one. Salary paid to an employee who is temporarily posted outside the base location. Okay. Remember, law has been written when this ECS, debit card, credit card were not there. Suppose I am working in Chennai. I have been asked to go to Bangalore, not permanently. Temporarily on site, I am posted to Bangalore for a period of 30-40 days. There, if they pay me money, because I don't have a bank account there or I don't have a banking facility there, if I am paid money, there is an exception. It can be even in excess of 10,000. Of course, today it is different. You have the ATMs and other things, but law was written when these were not there. So remember that and study. And due to death of an assessee, his family members has to be immediately paid, then they can be paid up to 50,000 rupees. Due to death of an assessee or something, if they can be paid, and where the payment is made on a bank holiday, emergency payment made on a bank holiday. Slowly they are taking that out also. Okay, these are some of the exception. The most popular are bank, LIC, government, agriculturist, fisherman, payment outside the base location, payment on a bank holiday. Okay, these are more famous, okay, in terms of questions. Otherwise, more than 10,000, it will be disallowed. Where the payment is made for the purchase manufacturer without, where the payment is made out of adjustment of a debtor creditor adjustment. You are a debtor as well as a creditor. I adjust in the books of accounts. 40A subsection 7, not only provision for gratuity, any provisions will be disallowed, contingent provisions will be disallowed. Okay, generally under income tax law, all provisions and transfer to reserves which are contingent in nature are disallowed. In case of gratuity, expenses will be allowed when the liability actually arises. So provision for gratuity will be disallowed. Understand, my dear friends, provision for gratuity will be disallowed. In the books of accounts, when they actually pay the gratuity, they will adjust it with the provision. In the books of accounts, we create the provision entry, and that will be charged in the P&L. In income tax adjustment statement, I will disallow it. When they actually pay it in the books of accounts, it will be adjusted against the provision, but in our income tax adjustment statement, we will separately claim less gratuity actually paid. Add provision for gratuity, less gratuity actually paid will be claimed. And contribution to non-statutory funds, that is unrecognized funds or in excess of limits, will not be allowed. This is what yesterday also we saw. Up to 10% you can contribute towards pension fund. In excess of that, I'm not saying it's non-statutory, but it is in excess of limits, so it will be disallowed. Mark to market losses, let us look at it when we look into ICDS. Okay, let us look at it when we look into ICDS. Am I clear to you? Okay, please go through section 40A once. Please go through section 40A once. No, Antonio. Expenses I have already recorded. Payment is made in the current year in violation. Now there is nothing to disallow because expenditure is not in this year. So it is treated as income. It is like reversal of expenditure. Okay. Section 43A, we already know how to account for exchange rate currency in terms of assets. How to account for it? It should be adjusted with the cost of the asset. When we did depreciation, we did a question also, Agni, Vayu, Trishul question also. First, I will record it on the date of transaction. And then on the date of payment, there is no concept of restatement here. Okay. The increase or decrease will be adjusted with the cost of the asset. Even if that asset is not there in the block also, I will adjust it in the block. For all other than assets, it will be taken as revenue item. For all other than item, okay, subject to the provision of section 43A. So 43A is a overriding provision. So if it is asset, you don't have an option. You have to adjust it with the cost of the asset. Subject to the provision of 43A, any other gain or loss arising out of foreign currency transaction, which means other than assets, you can treat it as revenue. What is parallelly happening is something interesting. You will see it in contract also. We saw in subsidy also. Majority of the ICDS provision, now they are bringing it inside the law itself. Okay. These are said in ICDS 6, which says effect of currency fluctuation. Now they have brought in 43A and 43AA. You will also see construction contracts. We already saw subsidy. So majority of the ICDS provisions are just getting incorporated in under the law itself. The next important section is 43B, statutory payments. 43B, statutory payments. Okay, in our notebook, my dear friends, in our notebook, section 43B, statutory payments. In our notebook, section 43B, statutory payments. 3 falling branches. 3 falling branches. Extreme left for government. In the middle for employees. Extreme right for banks and financial institutions. Extreme left government, middle employees, extreme right bank and financial institutions. Going back to extreme left again, government, under that A, tax, cess, duty. B, employer contribution to statutory funds. Employer's contribution to statutory funds. C, payment to railways for using their assets. In the middle for employees, A, bonus or commission. B, leave encashment. In the extreme right, interest. That is for banks and financial institutions, interest. There are 6 types of statutory payments under 43B. There are 6 types of statutory payments under 43B. Any taxes duty, employer's contribution to PF, railway payment to railway for using their assets, bonus or commission, leave encashment, interest payable to banks, NBFCs or any other financial institution. You have drawn it as three branches. Okay, put a flower bracket under that covering all the three branches so that we write the common provision. Okay, if it is due at the end of the year, if it is due at the end of the year, any of the six, if it is due at the end of the year, then deduction will be allowed, only if it is paid within the due date of filing returns. Then deduction will be allowed only if it is paid within the due date of filing returns. Repeating, any statutory payment. What is statutory payment? There are 6 types of statutory payments. Any taxes duty payable to government, employer contribution to PF or any of the statutory funds, payment for using railway assets, bonus or commission, leave encashment, interest. If these are due as on 31st March, you will allow it as deduction only if it is paid within due date. Otherwise, you will not allow it. You will disallow it and allow it in the year in which it is actually paid. And allow it in the year. However, where the set amounts are paid after the due date, then the same will be allowed in the previous year of actual payment. In the previous year of actual payment. Similar to TDS. Okay, if it is disallowed in a particular year, then I will allow it in the subsequent whenever it is paid. We have already seen this. I am again telling you the provision is not applicable for employees' contribution. It is an amendment only for employer. Now I take the opportunity to talk about two things which are important. One, what is the difference between employees' contribution and employers' contribution? Okay, take your time, then we will study the theory. Okay, employees' contribution. It has to be paid within the due date of the respective law. 36. Read along with 224. 36. Suppose if it is not paid within the due date of the respective law, it will be treated as income. So I am supposed to pay him salary. I deducted some money and paid the balance only to him. It is his money I am holding, not my money, which I need to remit it for his benefit. If I don't do it, whatever I recovered from him will be treated as income. And the law is very clear that it is your responsibility to pay. If you have not paid within the due date of the respective law, it will be treated as income. Subsequent payment expenditure will not be allowed. Subsequent payment expenditure will not be allowed. On the other hand, employer contribution, my own contribution in the given example, I have to pay it within the due date as per income tax law. If I don't pay it, it is disallowed, whereas subsequent payment, later if I am paying in a year, it will be allowed. Okay, that is the key difference between employees' contribution and employers' contribution. That is the key difference between employees' contribution and employer. Okay, so employees' contribution, pay it according to the respective law. Where it is not paid, then it will be treated as income. Okay, section 224, it will be treated as income. Subsequently, if you pay also, you cannot claim the deduction. Whereas employer contribution, if it is not paid within due date, then it will be disallowed However, subsequent payment you can claim it as deduction.
Sir, is it applicable only to PF or ESI
All
kind of claims
statutory
also?
funds, sir. I just took PF as an example. All statutory, sir.
Okay.
Go ahead. Sir, employees contribution, employers contribution. I am supposed to pay you 50,000 as salary. I reduced 2,000 and paid you only 48,000. This 2,000 I'm supposed to remit it in your name with the PF department along with my contribution of 2,000. As a entry, first I will tell you. Salary account debit 50,000, to bank 48,000, to PF payable 2,000. So how much is the salary I am claiming it as deduction? 50,000. Salary account debit 50,000. Okay, other is payable. I have not paid, which means the salary paid by me is only 48,000. Though I have debited 50,000. I have not paid within the due date. So this 2,000 will be treated as income. The net of effect is 50 minus 2. 50 on the debit, 2 on the credit. Subsequently, when you pay also, I will not give the deduction. You are supposed to pay, I am supposed to pay your contribution on time. For my contribution, employer's contribution to PF to payable. Not paid within the due date of filing under income tax law. Disallowed, and in the year of payment allowed. This is one aspect. The second aspect to understand is treatment of interest converted into a loan. Treatment of interest converted into a loan. Okay, we need to understand it little clearly. So, because this is a very popular adjustments in our examination question. Okay. Okay. Let's take that the interest of 1920, okay, is 2 lakhs, which is not paid. Just listen enough. If you interest of 2021, just listen. That's it. 2 lakhs that is not paid. 43B says, since it is not paid within due date, this will be disallowed in the respective years. 1920, 2021, it is getting disallowed. Or let me take it as, sorry, 18, 19, or okay, correct, 19. Okay. In 21, 22, bank converts this as a term loan. Bank converts it as a term loan, this 4 lakhs, pay it in 10 installments. Bank converts this 4 lakhs to be paid in 10 equal installments. Can I claim it in 2021? As deduction, the entire 4
No,
lakhs.
sir. Term loan is normally for a long term, sir.
So
should be capitalized asset.
Okay, can I claim it as deduction?
No, sir.
Why?
It is for a long term. No?
Yeah,
term loan normally.
Some other answer. Yeah, I take your answer, but some other answer. 2 lakhs I have recorded, which has been disallowed in 1920, 2021. Both the year you have disallowed. Now bank converts it into a term loan. Very good answer. Conversion into term loan is not payment. What is allowed? When it will be allowed? As he was saying, only when it is paid. Only when it is paid. Conversion of term loan is not payment. The law uses the term. Circular of CBDT has clarified that conversion of term loan, extension of credit, only if it is paid it will be allowed. Okay, conversion. Okay, so this is not okay. Whatever installments paid in 21-22 can only be claimed. Okay, only on payment basis. Okay, my dear friends. Okay, where the interest on term loan or any other borrowing is converted into a new term loan, then such a conversion will not treated as amount paid. It has been clarified by the law. I will not take the conversion as amount paid. Hence, the disallowance provision will apply. In short, conversion of unpaid interest, repayable install will be disallowed. Irrespective of the nomenclature, such unpaid interest which is converted into term loan will be allowed in the year in which interest gets actually paid. Okay? Why the law gives such an explanation? First, I will tell you that. The difference in accounting in books of accounts as well as income tax law. Books of accounts, this interest you would have claimed in 1920, 2021. If bank has converted into a term loan. Are you understanding? So, I will tell you in terms of accounting, books of accounts, what I would have done, interest account debit to interest payable. Interest account debit to interest payable. Now, interest payable account debit to term loan. When they converted it into a term loan. And when I pay the installment, term loan account debit to bank. So, when I am paying it in the books of accounts, it goes to balance sheet. When I am paying the money in books of accounts, it goes to balance sheet. Whereas in our income tax law, this should be treated as expenditure because these two would have been disallowed. The law, irrespective of the nomenclature, such unpaid interest which is converted into term loan will be allowed in the year in which it is paid. Okay? Read through 43B once, including the employer-employee. Yeah. Yeah. Even if there is a violation, 6DD is an exception to 48. Thanks for correction. This is 90 days or less. This is 90 days or less, not more. It is 90 days or less in the 8th point. a company created the bonus provision, bonus to bonus payable. It's a statutory payment. But the labor union is not ready to accept the bonus. They said that the bonus is less, so we will not accept. The due date was coming up. So what the company did is they transferred it to a trust, employee welfare trust. They transferred it to employee welfare trust. Ultimately, from the employee welfare trust, it is paid to the employees. The unions, the dispute got settled. It was paid to the employees within the due date. Within the due date. Assessing officer disallowed this, saying, you have not directly paid to the employees. Bonus or commission should have been directly paid to the employees. You have only paid to the trust and not directly to the employees, so it will not be allowed. Can the assessee claim deduction? Yes. Shawson Chemicals is the case where dispute arose regarding the quantum of bonus between the assessee company and the employees union. Since the dispute is not resolved, the due date for filing is approaching, the company transferred the provision made to an employee trust account. Dispute was later resolved. The money from the trust is paid before the due date. This is important to understand. AO disallowed the expenditure, specifying that the amount paid was not paid directly to the employees but to the trust. Held by the Supreme Court, the bonus amount is ultimately paid to the employees before the due date of filing. Okay, before the due date of filing. And okay, trust was used as an intermediary route to ensure compliance requirement. Since finally it is paid to employee, it is allowed as deduction. We understand the clarification. Number institute material, the clarification is also there. Had the bonus not been paid to employees from the trust before the due date, expenditure would not have been allowed. 43B clearly specifies the amount should be paid. Just now we saw term loan conversion will not be allowed. The amount is not paid. Should be paid to the ultimate beneficiary before the due date. In the said case, it is also paid from the stubs. Okay, trust or substance over form. Okay, in the exam, if they say that it is not paid, you can quote Shawson Chemicals, but there it is said it should have been paid within due date of it. Okay, okay. Actually, with this, the case law part of PGBP chapter gets completed. Okay, whatever case laws we have covered, those are all the case laws. If at all in the May 22, if there is any new case law, that we will see later. But these are all the case laws. Yeah, yeah, intermediary trust or anything. Yeah, employee welfare it should be. Question number 29. Hari, an individual, carries on the business of purchase and sale of agricultural produce. He borrowed loan from State Financial Corporation and Indian Bank, and he has not yet paid the interest. For State Financial Year Corporation, previous year 1819 and 1920, 15 lakhs. Indian Bank, 30 lakhs. SFC and Indian Bank restructure the interest into a loan facility to be repayable in 60 equal installments and 45 equal installments respectively. For the year ended 31st March 22, 5 installments of Indian Bank and 3 installments of SFC are paid. Compute the amount of deduction that can be claimed. As a note, I will just write and keep so that you are clear. This interest pertaining to 1819 and 1920 would have been disallowed in those years as it is not paid within the due date of filing returns. Okay, it has not been paid. So in 1819 and 1920, this would have been disallowed. In the current year, whatever installments paid will be allowed as deduction. For state financial corporation, 15 lakhs is due. They have converted it into 60 equal installments and 5 installments are paid. Huh? Sorry, 3 installments of SFC are paid. Okay, 15 lakhs divided by 60 equal installments. Thirty divided by 45 into 5, 30 lakhs. Yeah, four lakh, 8,000, 3,000. Apart from ICDS, this is the last unit which we is going to speak about the other administrative aspect. But before that, section 41, deemed income. I told you at the beginning itself, there are two sections which speaks about income, 28 and 41. 28 directly it spoke about the list of incomes which are taxable, compensation, partners remuneration, perquisite, etc. 41, deemed income. Let's read it. Any allowance, loss or deduction has been claimed in any earlier year subsequently recovered or any trading liability has ceased to exist, then the same shall be treated as income. Then the same shall be treated as income. I'm repeating the point again. Any allowance, loss, or deduction which is claimed earlier, allowed earlier, now recovered, it will be treated as income. Very, very simple. And it covers everything. Bad debts. If I have allowed earlier as deduction, now when I am recovering, it will be treated as income. Scientific research asset. I have allowed earlier as deduction. Now after the research is over, the asset is not transferred to the block. The asset is directly sold. Sale value will be treated as income. Specified business. Electricity companies following straight line basis. Depreciation. So, any expenses, losses, which are claimed earlier as deduction, now it is recovered, it is known as income. Any trading liability ceasing to exist. Accountancy has been little unfair on one aspect. We have a term called bad debts. If I sell goods on credit and the person doesn't pay, bad debts. What if I don't pay my supplier? Bad creditornu சொல்ல முடியாது. Confession அது. If I don't pay my supplier, accountancy has not coined a term. Trading liability ceasing to exist. Right back of creditors. Trading liability cease to exist. Any trading liability. I purchased goods on credit. I am not paying my supplier. When I purchased, purchases account debit to creditor. So I have claimed it as expenditure. Now I am not paying it to creditor. It should be treated as income. Right back of any trading liability that has ceased to exist will also be treated as income. So, repeating, any allowances, losses, anything which has been claimed earlier, now recovered is also income. Any trading liability which ceases to exist, which has been reversed, which is written back, will also be treated as income. Okay. In this is something to discuss. We'll come back to the other things later. This is waiver of term loans. Waiver of loans. This is where somebody was also asking me yesterday or something. Waiver of loan. There are three types of loan. Long-term loan, loan for working capital, and waiver of interest itself. Working capital loan is a trading liability. Please understand. Working capital loan is a trading liability. Long-term loan will be for assets. In the SEBI case I told you sale case which I told you in the beginning. Sale imported and machinery for 10 crores, 9 crores funded by State Bank. They repaid 8.5 crores, last 50 lakhs waived by the bank. Court took the stand, this is like subsidy. part of the asset is funded by an external person. So reduce it from the cost of the asset. Term loans are normally for purchase of asset. Hence, the term loan waive will be adjusted with the written down value of the asset. Term loans are normally for purchase of asset. If there is a waiver of term loan, then adjust it with the written down value of the asset. Whereas working capital loan, what are all they? Trade credit, OD, cash credit, etc. Working capital loan for stock and debtors, it is a trading liability. Waiver will be treated as income because we just saw. The law itself says if there is a cessation of trading liability, if trading liability is no more payable, then it will be treated as income. And most important to understand is also waiver of interest. No adjustment. Yeah. Already you have treated it as income. Sir, in this given example, interest of 1922 lakhs. Now bank says you need not pay that interest. Is it an income? Only if a loss or expenditure or deduction is allowed earlier, now recovered, or trading liability ceasing to exist, now it is treated as income. I have not allowed 43B, I have disallowed this amount. In section 43B, I would have disallowed this 2 lakhs in the financial year 1920 itself. So it is not allowed earlier. When you are waiving off, it cannot be treated as income. Okay. Interest due but not paid would have been disallowed under 43B and already taxed. At the time of waiver, it is no adjustment, neither an income nor an expenditure. Waiver of term loan, adjusted with the cost of the asset. Waiver of working capital loan, take it as income. Waiver of interest, no adjustment. I'll tell you 2 things in examination, 2 or 3 things. The bank waived interest, which has been taken to income in the P&L account. Please understand in examination how this adjustment will come. As per books of accounts, it is income. Because as per books of account, you have claimed the interest. So as per books of accounts, it is an income. So the bank waived the interest and it has been treated as income. No problem. You should take it out. Because for you, it is for us in income tax law, less waiver of interest, which is considered as income, but it is not taxable as income under income tax law because expenses is already not allowed. Take out that. If it is just an adjustment, the bank has waived 5 lakhs interest. Don't do anything in the main question. Just write a note, neither it is an income nor an expenditure. Third thing, adjustment will say, term loan for purchase of plant and machinery, 3 lakhs, remain unpaid, which has been waived by the bank. We should adjust it in the WDV. When we do the plant and machinery, okay, less like deductions or deletion, we should adjust this. Term loan waived by the bank. It's like a subsidy received. Although the depreciation you should not claim. Okay. Working capital loan, which has been waived by the bank, is taken as a capital receipt. It is considered as a reserve. No, for our income tax adjustment statement, it should be treated as income. These are all the adjustments which they can give. Term loan, working capital loan, interest. Interest can be as an adjustment or they have considered it as income. The other things, this balancing charge, sale of assets, bad debts recovered, etc., will all be treated as income. Please read section 41(1). Okay. Though I have not given it as an example in the material, I'm going to work out about treatment of bad debts recovered. In your notebook, please take it down. So when I claim 5 lakhs, I am allowed 5 lakhs. Whatever I recover will be treated as income. But that's claimed 5 lakhs. But what is allowed by the assessing officer is only 3 lakhs. Which means 2 lakhs of bad debts which you claimed, he did not allow. He felt that the debtor might repay you, etc. Now you recovered 3 lakhs. How much is taxable? Okay, I gave that with our friend's answer. The ground rule is whenever you allow, assessing officer takes the upper hand. Whenever it is recovered, assessee takes the upper hand. Assessee beneficial provision. Assessee will say, out of the 3 lakhs, 2 lakhs I have recovered, which you have already taxed, which you have not allowed as deduction. Over and above that is only bad debts recovered. Okay. Assessee will argue, or assessee can prove, okay, the first 2 lakhs of recovery is towards the portion not allowed by the AO. Okay. So you cannot again tax. You have already taxed it. I claimed 5 lakhs. You disallowed 2 lakhs. So the first 2 lakhs of bad debts is towards what you have not allowed. The balance of recovered amount will be treated as income. So as our friend said, 3 lakhs minus 2 lakhs will only be treated as income. Am I clear?
Sir,
Listening?
sir, we anyway don't know which portion of the bad debts has been recovered, and those details we won't be knowing now, sir.
Yes.
This provision, I mean, it's suddenly assessee friendly, meaning the assessing officer's contention, if it had been there, would have been that 2 lakh I anyway didn't allow you to claim as a deduction. How can I allow you to claim that 2 lakhs which I didn't allow earlier? How does that not come into the purview at all, sir?
I reframe your question in such a fashion. You are asking me, can you identify this 3 lakhs against whatever has been allowed? The answer is no. It is a assessee friendly provision. At the time of allowing, the assessing officer only allowed 3 lakhs. Now, whatever I recover, I can, as an assessee, though assessing officer can map and tell you, no, this assessee I allowed, that is only you have recovered. At the time of recovery, assessee can prove or that 2 lakhs which you have already taxed, because I claimed it in my P&L account. You added it back in your assessment. You added that saying this 2 lakhs I am not allowing. So, for which I have already paid the tax. When I add it back, which means my income goes up, I have already paid tax. That 2 lakhs which you have already taxed, again I will not pay tax for that. The balance of the bad debts only recovered will only be considered. So at the time of recovery, this 3 lakhs will be apportioned by the assessee as to the extent which is already allowed, that is 2 lakhs, and the balance, to the extent already disallowed, that is 2 lakhs, and the balance will be treated as income, if that is your question.
Yes, sir.
Yeah, that is what that's the answer for your thing also. It is only on the quantum, it is not on the party. Once or twice they have asked this, so I want you to be clear. Okay. Same, the provisions are applicable for succession also. That is, the previous entity has claimed the bad debts. The succeeding entity has recovered it. We know the ground rule. Provisions are applicable to the transferee entity as it would have applied to the transferor entity had there not been an amalgamation. I am sorry for repeating 43A and AA. That is the same thing which we studied there. Okay. 43C, special provision for computing stock in trade. We will again study this in capital gains. Asset converted into stock in trade. Okay, stock in trade converted into asset, fair market value will be taken. Asset converted into stock in trade. EPO, the amalgamation. In the books of the transferor, it is an asset. When it comes to transferee, it is a stock in trade. This is covered in section 45 of our capital gains. The provision is applicable in these cases where it is an asset in the books of transferor, becomes a stock in trade in the books of transferee. Cost will be cost of the owner plus cost of improvement plus expenses incurred. In other words, from here, overall in everywhere in income tax, one thing which we will never recognize is revaluation. Revaluation is not a concept under income tax law. We will disallow or we will not regard income revaluation. 43CA, 50C and 56 are interrelated. 43CA, 50, sale of immovable property, actual sale value or stamp value, whichever is higher. When it will come in 43CA, if the immovable property is a stock in trade. If it is an asset, 50C, for the receiver, it is a gift, inadequate consideration. Okay, so 43CA, 50C and 56 are same provision. Okay, where the stamp value does not exceed 110% of the consideration, it will not be. Okay, I wish that you hold back on this. When we study 50C, I will study. Along with this amendment, we will do it. Okay, along with this amendment, we will do it when we study 50C. There you will have a better understanding. I have a couple of questions there which you will understand. 43CB. As I told you, this is also part of ICDS. This is also part of ICDS. How to record construction contract revenue and service contract revenue. Percentage of completion method. Percentage of completion method, I think accounting also tells that. But if the project itself is only for 90 days, then full completion method. After completion, you record. Yeah, only in the year of completion. The question was, suppose 90 days only. I started on Feb 21, ends on April 30th. Which year I will record? April 30th. That is the April. Only on completion. If it is 90 days. If it is discrete services, the best example is prepaid cards, data, prepaid data, on straight line basis, not on usage, on straight line basis. Profit and gains from a construction contract shall be computed on the basis of percentage of completion method. Where the duration is not more than 90 days, then on the completion of the project. Where it is indeterminate, then on straight line basis. Okay, contract revenue will include retention money. Contract revenue will include retention money, and project cost shall not be reduced by incidental expenses in the nature of interest, etc. Those will be taxable in their respective heads.
Sir, the condition of 90 days, Is it because certain companies have quarterly, like listed companies have quarterly calculation of their?
So small projects, not because of those things. Small projects.
No, sir. But what if a small project again is only for like 6 months? Why is it taken as 90 days and not less than 1 year? அதுக்காக கேக்குறேன்.
No reason. No reason. They consider 90 days as small projects.
Okay, sir.
Up to this.
Sir?
Yeah.
Sir, if a project has been started as a short-term project for 90 days and it does not get completed within 90 days due to unforeseen circumstances, for example, the lockdown that has happened.
Yeah, because
So
of that, if they are still, it will be taken only in the year of completion. Only when the project, at the initiation of the project, if it is a 90-day project, that is enough if you are able to prove.
Okay, sir.
Please read through once up to 43 CB before going to 44. A friend has asked me to explain the fourth point, where the contract involves indeterminate number of acts over a specific period of time. 3 months prepaid. Prepaid that 499 plan, 3 months. How much per month will you take? Indeterminate. I don't know how much this month you are going to use, how much next month you are going to use, or it cannot be determined there. So it says, then straight line method needs to be followed. 499 divided by 3 every month will be the revenue. We are going to section 44A, the first item, special provision for trade, professional or similar associations. This is applicable if they are not mutual concerns. Mutual concern, it is not at all taxable. This provision is applicable for those entities which do not distribute their income to their members. Okay? If that is a mutual concern, then it is different. Ipo, rent type of income. For example, let us take that your flat association is not a mutual concern. Okay? For example, your flat association is not a mutual concern. Every month you are paying subscription. Every month you are all paying subscription or maintenance charges. That is like a business income. They keep the money deposited and they earn interest. That is like IFOs. Now, the business income has a loss. Can I set it off against any other income? The law say it is allowed only to the extent of 50% of total income. The law says that it is allowed only to the extent, the loss can be set off only to the extent of 50% and not the whole of the loss. Not the whole of the loss. Mutual concerns, if they have both this income and other income, loss to the extent of 50% can only be set off. And therefore a question in page 73. Boat club is an association governed by the provisions of section 44A. That is, it's not a mutual concern. The subscription received for the year is 3 lakhs. Expenditure in the normal course were 385, 2 lakhs and 385. its other income taxable is 275. You are consulted, Ayopollam, as to how boat club's income, okay, would be determined for the said assessment year. Read through. I haven't seen a question. No, you cannot. The question was balance. Can I carry forward 185 minus 137 500? 185 is the loss. I adjusted only 137 500. Can I carry forward the balance? No, you cannot. No, it talks both about set off and carry forward. Not only, yeah, probably in the material I have written preceding here, but it talks about both set off and carry forward. Yeah, other sources. If you have a profit in business income. Yeah. 50% of the total income. Suppose you have a brought forward loss. Current year, you have both business income and IFOS. Add both these things. 50% of that or the brought forward loss, whichever is less. in this case, whatever we have worked, it is current year loss only. So it can be set off against, normally it can be set off against business loss, can be set off against any income other than salaries. But in this case, it is restricted to 50% of the other. Not a very popular section again, 44AA, compulsory maintenance of books of accounts. Okay, compulsory maintenance of books of accounts. Who should maintain? Okay, the law divides it into two: professionals, business people. Professionals, okay, those who are carrying on the legal, medical, engineering, architect, accountancy, technical consultancy, etc. Gross receipts is more than 50,000 in all the 3 preceding previous years. Gross receipts. To know whether I should maintain it in 21-22, I need to check the gross receipts of 19-20, 18-19, 17, 20-21, 19-20, 18-19. If in all these 3 years it has exceeded 150, then irrespective of anything, this year you maintain the books of accounts. Yeah, 3 consecutive years. Suppose if this is the first year, then if you estimate it to increase 150, then compute it. Okay, right? Taxable in a profit, sir. I mean, my no expenses, sir. My gross receipt is my profit no vechinda kuda 150, sir. Okay, right? Business or profession. In case of business or profession, there are 2 criteria. One is gross profit, another is gross turnover. Okay, but here it is in any one of the 3 years. It is not in all 3 years. It is in any one of the 3 years. With regard to gross turnover, the limit is 10 lakhs. However, for individuals and HUF, 25 lakhs. With regard to gross profit, 120. However, for individuals and HUF, 250. If your turnover exceeds 10 lakhs or your profit exceeds 1,20,000 in any one of the past 3 years, maintain books. But individuals and HUF alone, it is 25 lakhs and 2,50,000 instead of. If assessee is not opting for presumptive computation, you have to compulsorily maintain your books. We'll see that. If assessee is not opting for presumptive computation, compulsory maintenance of book, compulsory audit also. Okay? Okay? Not a popular section, at least from our final perspective, not even inter perspective, but this is a questionable area now. Okay? 44AB, compulsory audit. Section 44AB, where audit, mandatory audit provisions. Okay? Where cash receipts exceeds 5% of gross receipts, 1 crore. Or I will talk the other one and come to this. This is the amendment where the cash payment or cash receipt is less than 5% of total payment or total receipts. Okay, now the term cash means all unapproved. The CBDT has clarified that. If your business, 95% of the business is transacted to banking channel, When I say business transacted, I mean both income and expenditure. When 95% of your business is transacted through banking channels, then audit is mandatory only if your gross turnover exceeds 10 crores. But if the cash transactions is more than 5%, be it in payment or in receipt, then exceeds 1 crore. Then if the turnover exceeds 1 crore, get them audited. Exemption is presumptive computation. For business, for profession, it is still gross receipt exceeding 50 lakhs. Read through once. Is there a video getting stuck, Hari, Sudha, Ananya?
No, sir.
No, sir.
Sriram, என்ன ப்ராப்ளம் உனக்கு? No problem. No. Okay, right. Let's do some questions before taking up before understanding further. Okay, first on 44AA. You know, this is a person carrying on profession as film artist. His gross receipt from the profession are as under 115, 180, 210. What is his obligation to maintain books? In case of profession, in all the 3 years, it should have exceeded 150. But you can see in financial year 18-19, it is just 115. There is no obligation to maintain books. You can write it here itself anyhow. In this case, there is no mandatory requirement to maintain books because it has not exceeded. I'm going into 44 AB questions now. Okay. Preeti, carrying on textile business, and the total turnover for the financial year is 9 crore 50 lakhs. In the following circumstances, she seeks your advice whether the books needs to be mandatorily audited or not. A. If the whole of the turnover is through banking channels. Question number 32. Case A. Okay. If 100% of the transactions are through banking channel, then the limit for mandatory audit is rupees 10 crores. If 100% of the turnover transactions, don't look just turnover. If 100% of the transactions are through banking channels, then the limit for mandatory audit is 10 crores. The actual turnover is rupees 9.50 crores. Hence, audit is not mandatory. If 90% of the turnover is banking channel, 10% through cash. Okay. And unapproved modes, which are cash, bearer check, and crossed check. Transaction exceeds 5% of total transaction, then the threshold limit for mandatory audit is rupees 1 crore. Then the threshold limit is 1 crore. In the given case, 10% of the total receipt is through unapproved modes. Turnover exceeds 1 crore. Hence, audit is mandatory. Hence, audit is mandatory. Ninety percent of the turnover is through banking, 5% bearer check, 5% cash check. The same audit is mandatory. Last year they mentioned only cash. Then only CBDT clarified cash includes cross the check and okay, that's why this question. if the whole turnover and 90% of expenditure, then also okay. Progressing to the next question. The total receipts and payments of an individual carrying on business is provided. Specify whether such individual is bound to get his books audited. Sale of goods, sale of asset, scrap sales, interest income, miscellaneous receipts. Payment, purchase of goods, other expenses, purchase of asset, income tax paid, investment made. Hmm? Sales is total is 500, 20 lakhs is by cash, and the balance, sorry, 20, okay, this should be enough. Sale of assets, total is 160, 8 is by way of unapproved modes or cash, remaining. Scrap sales, fully by cash. Interest income, fully by banking. Miscellaneous receipts, fully by banking. As of now, no problem. He is not coming, the assessee is not coming under tax audit because approximately 4.37 percentage only. Similarly, let us work for payments. Purchase of goods 360, out of that 16 is unapproved. Other expenses 120, out of this 12 25, 10, 40. Is it coming to 5.05 percentage? Yeah, okay.
Yes, sir.
Payment by unapproved modes exceed 5% of total payments. Hence, the threshold limit for mandatory audit is 1 crore. So the total sales is 500 lakhs, 5 crores. Within, they are giving within bracket what is cash. If they are not given, it is hence. Yeah, the question that is asked, which I want to also clarify, is should I take only the turnover and see that 5%, or should I take totally? Law has said 5% of gross total receipts, not even classifying it into capital and revenue. It's a receipts and payments account. 5% of gross total receipts, 5% of gross total payments. So it will include interest income, even though it is taxable in some other forms. Of? Yeah, exactly. Now gross turnover has exceeded 1 crore. 5 crores is the gross turnover. Okay, so suppose if this is just 99 lakhs, but it is more than 10%, that's okay. You need not get your books audited. Yeah, you're right. For computing audit limit, you will not include interest income. Okay, it will be standalone only the turnover. For computing this 5% criteria, you will include everything. Yeah, yeah, accepted. I agree with you. Am I clear to you? Right? Okay. So, what is the amendment? This amendment came last year. Last year, this was 5 crores. Now it is 10 crores. That is the amendment. Not the other part. Not this part is not the amendment. This part is the amendment. Whatever I have written. So you know it's a questionnaire which is being answered. Okay, 3CD is the questionnaire which the auditor is supposed to answer. So I always uphold that if you think that after passing you need not answer any questions, you are completely wrong. After passing only, all questions are mandatory questions, no choice at all. If you think that after passing CA you need not attend class, you are completely wrong. When you are at least in CA class, you have an option of switching off the class or not opting for that class, etc. But CPE அப்படின்னு இருக்கு, continuing program of education. That is the greatest punishment for becoming CA. Okay. Okay, so don't think you are away from questions or away from classes. You are not. Okay. The last arena of our discussion is presumptive computation of income. Presumptive means assumption, and income is computed on the basis of assumption. I want to favor all the small assessees. I want to give this benefit to all the small assessees, so this provision came. Okay, on a comprehensive basis. Who is a small assessee? In the case of those who are carrying on business, if their turnover does not exceed 2 crores, they are a small assessee. In the case of those who are carrying on profession, if the gross receipts does not exceed 50 lakhs, they are small assessees. In case of GTA, goods transport operators, okay, if their number of vehicles does not exceed 10, they are small operators. Okay, for them these benefits, why to put them in the cumbersome process of maintaining books, preparing, etc. and all? I want to give them the lawmakers want to give them the benefit. They say, I will specify a percentage or a sum, declare that as income, no questions asked both sides. No questions asked both sides, you can go. Then comes ego, which is more superior. Okay, I am giving you a benefit, you are not availing it. Okay, okay, I told you declare 8% or 6%. You are saying no, my turnover is less than that, my income is less than that. Then I say, do one thing, maintain books and get them audited. Not only just maintain books, also get them audited. Commissioner, when his retirement speech, farewell speech is one of the famous speeches in income tax. He was asked, why did you say maintain books and get them audited? For that, the commissioner said, the assessee should feel it's better to pay tax than to pay audit fees. Okay, so something we want to match and see what comes. So we have drafted the provision like that. One of the very humorous speeches you can ever listen, when the 2000 change took place, the new PAN, whatever now you are having, there was an old PAN also, there were no card and all. There will be a number, that's all. Mostly it is within the department. Then only this new card system and all came. So the old PAN for assessee's name, father or husband name. In the new PAN, only father name. So women assessees approached the department, said, you made a mistake. father or husband name, for which the department answered, no, no, whatever is permanent only we want to have that's in this car. That's why we are having only father's name. So, okay, so you will see only three things in that whole aspect. Okay, and when this new card came into, this was new. India were not even having identity cards at that time. Not all companies were having the tag and ID. It was altogether new. So somebody was, it was happening in Chennai, somebody was crossing the Gemini signal. This became a very famous scene in a movie. Okay, and he has crossed the signal when it was red, and the police stopped him. He had the presence of mind to take his PAN card and show to the police officer saying, income tax department line vara raid ku poren. The policeman immediately said, sorry sir, he put some escort and made him to go to his office. It became an article also in the newspaper because at that time the policemen were not aware of PAN. If you look at the card on the top in a national emblem, Government of India, Income Tax Department, name, photo, sir. So this presumptive taxation is like that. If you declare a lesser income, okay, so coming back. So they want to benefit the small assessees. Declare this percentage, no question asked. Okay. All expenses under 30 to 37 are deemed to have been claimed. For all this provision, let's go and read it. All expenses under 30 to 37. This is where I said unabsorbed depreciation is also deemed to have been claimed. If there is a brought forward unabsorbed depreciation, that is also deemed to have been claimed because all expenses are deemed to have been claimed. Okay, let's go. 44 AD, presumptive taxation for small businesses, only business, not profession. Provision applicable for individuals, HUF firm, not applicable for companies and LLP. You cannot say if you less than 2 crores, you need not maintain books for a company because Companies Act makes it mandatory. You cannot overrule company law. Okay. The provision is applicable for assessees engaged in business other than this because for them there is a separate provision. Gross turnover does not exceed 2 crores. Income is 8% of gross turnover. Income is 8% of gross turnover, and if it is through banking channel, then I should have highlighted this also, 6% of turnover. If the entire income is through approved channels, then 6% or whatever is the turnover through approved channels, 6% of turnover. Common condition, I will write it last. Okay. 44 ADA is only for profession, 50 lakhs, 50% of gross receipts. 50% of gross receipts. Up to 50 lakhs, more than 50 lakhs, obviously you have to. 44 AE, flying of goods vehicles. Number of vehicles should not, the assessee should not own more than 10 goods carriage at any time during the previous year. You should not own more than 10 vehicles. Then only this provision is applicable. Income is for HCV rupees 1000 per ton, which means 1 kg 1 rupee. Technically, this means 1 kg 1 rupee. And for okay, per month or part thereof. Even part of the month will be taken as 1 month, and non-HCV 7,500 per month or part thereof. Not on the month of usage. It will be computed for every month from the month of purchase. Common points. All deductions are deemed to have been allowed. Unabsorbed depreciation brought forward is also deemed to have been allowed. Where assessee wants to declare a lesser income, he has to maintain books of accounts and get them audited. Read through the 3 provisions. More than? Yeah. More than or equal to, yeah. Our friend is asking, can I declare more? 10%, 12%? Yes. You cannot declare less. Yes, Rita. Yeah, yeah. We'll do a question now where you see. What is HCV? 12,000 kgs or more. I think I failed to write it. Please write it and keep. HCV means 12,000 kgs or more. HCV means 12,000 kgs or more. That is what is, and per k 1 kg 1 rupee, right? And it is for every month or part thereof. Even one day will be taken as 1 month. Question number 34. Praveen, engaged in retail trade, reports a turnover of 1 crore 98 lakh 50,000 for the relevant financial year. His income as per books of account comes to 1120. All transactions are carried out by account payee check or ECS. Retail trade is the only source of income. Question 1. If Mr. Praveen eligible for opt for presumptive in respect of his income? If so, determine his income. What will be the income if 50% of the turnover is through banking and 50% through unapproved modes? In case Mr. Praveen does not opt for presumptive taxation, what are all the obligations? What is the due date of filing income under both options? Is he eligible to opt for 44 AD? Yes. Okay. Assessee is an individual. Gross turnover has not exceeded rupees 2 crores. Hence, he is eligible to opt for 44 AD, presumptive computation. Hmm. No, no, I'll come to that question. I'll write the answer here. I'll come to that. Case D, he does not opt for presumptive computation. Case D, assessee not opting for presumptive computation. Income as per P&L account is 11,20,000. Income as per P&L account which he has computed is 11,20,000, which is lesser than even 6%. Yeah, 11,91,000 is 6%. So, since the income is lesser than specified percentage, assessee has to maintain books and get them audited. Assessee has to maintain books and get them audited too. Yeah, audit is not mandatory. Books he should maintain, but audit is not mandatory if it is higher. effective dates. In case of presumptive computation, no audit, so 31st July. In case of presumptive computation, I opt for 44 AD, then no audit, audit is not mandatory, 31st July. In case of not opting for presumptive computation and declaring lesser income, audit is mandatory, so 31st October. Am I clear to you? I will take this opportunity to write some other provisions also. Okay, where assessee opts for presumptive computation, disallowance provisions are also not applicable. Assessee has said 8% of my gross turnover, he has declared income. Assessing officer now finds out that you have made cash payment in excess of 10,000 to the extent of 1 lakh. Can he add it back? Means no. 8% is final. I have paid to relatives in excess of fair market value. You cannot add it back. Okay, 8% is final. Okay, if you have declared it, even disallowance provisions will not apply. Okay. So we will study this later, where assessee opts for presumptive computation. Okay. Only last installment of advance tax is applicable. He need not pay June, September, December and all. Only March 15th is applicable. Okay, where assessee opts for presumptive computation, only the last installment of advance tax is applicable. We'll study that when we do TDS and advance tax, but generally. Now for the question our friend was asking me, or he want to write that also. Once assessee opts for the scheme, he needs to stay in the scheme for 5 years. Okay, lock-in period, if you are opted from there 5 years. Where assessee opts out within 5 years, then he cannot again enter the scheme for next 5 years. Okay, lock-in period, you can break the lock-in period, you can come out of it, but so year on year option is not available. 5 years you need to be in the scheme. Am I clear? Am I clear to you? Okay, right? Try out the 35th question, please. Try out the 35th question. Please try out the 35th question. This is the answer I am getting. Sorry. Am I clear? 6,82,500 depending upon the number of vehicles. Okay. Assessee carrying on multiple business. One of the business is this. He has so many vehicles. It can be a question. You should remember the rates and other things. It can be a questionable area. The last provision of this chapter as such before, I mean, there are other non-residence provision which we will see later. The last provision is business reorganization, which we very well know for cooperatives bank. We are aware of this provision, but it is exclusive. For depreciation, amortization, all things, the total expenditure will be apportioned based upon effective period, not even usage, effective period. If there is an amalgamation of two cooperative societies, the total of these things, depreciation and amortizations, will be proportionately distributed based upon their effect. We have seen this. Okay, there it is effective period of usage for asset. Here they have just said effective period. There was one question in our institute material on this. Alpha Cooperative Bank amalgamated with Beta Cooperative Bank on 1st December. The depreciation amounted to 240, VRS 360. Compute the amount of deduction that can be claimed by Alpha and Beta cooperatives. VRS compensation allowed in 5 equal installments. So you should not take the entire 360, 3,60,000 divided by 5. 3,60,000 divided by 5. This is the total expenditure. This is the total expenditure, my dear friends. Okay, this is the total expenditure. For Alpha Limited, okay, April plus May plus June plus July plus August plus September plus October plus November. Okay, for Alpha Limited, it will be repeating April plus May, June, July, August, September, October, November. 244 days, 3,12,000 into 244 by 365, 208,750. No. Oh, effective usage means days started. For Beta Limited, okay, 365 minus 244, 121 days, or 312 minus, okay, this is the expenditure. It's a 35 DD provision. DD 35 DDA amortization la pathena amal idu VRS compensation will be allowed in 5 installment, not in 1 year. Yeah, go ahead. No, that's what I said. Effective period of usage, effective period. Only if they use the word effective period of usage, then we need to see which date they started, etc. Okay, so this is with regard to 44 dB. I haven't seen a question, but generally in our institute material, they have put a question. Okay, if I can tell you what are all the provisions we are yet to cover. Okay, what are all the provisions we are yet to cover? These are all the provisions in PGBP we are yet to cover. Okay, 40B, which we will cover it in assessment of firm. 40BA in assessment of AOP, and all other things in non-resident taxation. All other presumptive computations and royalty treatment, etc. All those things in non-resident taxation. The two things, 40B, remuneration to partner, and 40BA, what are all the remuneration to members of AOP BOI, we'll cover it in their assessment of firm, assessment of AOP. Otherwise, all the provisions as such are covered. Starting from section 28 to 44, all the provisional aspects are covered. That is income, mode of computation, expenses allowed, disallowance, administrative and presumptive taxation, and the support provisions of section 43. Okay, in this 43CA, I have held it back to discuss widely under 50C. When we do 50C, we will be able to discuss it. Okay, capital gain. If it is used as an asset, capital gain. If it is stock in trade, 43CA. And for the receiver, gift provision. So everything we will cover it there and do. So these are all the covered area of PGBP. Okay, along with all the relevant case laws for your examination. So when we start tomorrow, we are going to start with ICDS. Okay, 1.5 hours of discussion of various ICDS, what they are telling, and then go forward and start doing the comprehensive questions. I want to tell you two things. PGBP is a continuing chapter. Till we complete assessment of individuals, PGBP will continue. Probably here we might work some 10 questions, but every chapter we will be working 10 questions, so that at the end of it, you would have worked 50 questions in PGBP. So it's a continuing chapter. It will go on. So as we go by, we will remember the case laws. We will remember the intricate provisions, etc. But if you think that it is a very, it is always a myth to carry that it is a very vast area, voluminous area, etc. No, it is not. I can assure you it is not. It is very simple area. We know the questioning also. As we go through the past question papers, you will understand what are all the questions they are asking also. So do not worry. Meet you tomorrow morning 6 o'clock. to continue with PGBP. We'll complete ICDS and comprehensive. Next 2 days, we should move to capital gains. All the best, friends.
Thank you, sir.
Thank you. Thank you, Sudha.